Well, let me quickly take you through how equity markets have fared this Monday. You've seen the Nifty up 1.6%. You've seen a 390-point uptick on the Nifty 50 index. A very, very decent day of trade, at least at close, post adjustments. IT was up 3.25%. This is again post all of the adjustments that have happened. The Nifty Bank was up 1.7, so some very sharp moves seen on both IT as well as banks, which have led the index higher. When you're looking at some of the other sectors which have actually done well, there's FMCG, there's metals, both of which have gained over 1.5% in trade. You've seen the PSU banking index up around 1.4 odd percent. Pharma, energy, defense, all of those also traded in the green, with realty up 1.3 odd percent. So that's how the texture of the market shaped up. What we also saw as a characteristic today, very strong breadth. 44 advances to just 6 declines is what we saw. We saw Grasim as one of the top gainers of the day. 5% higher on Grasim is what we saw today. TCS, Interglobe Aviation, Infi are just some of the other names which have done very, very well. Grasim, by the way, the perk up was post the 315 mark. Again, the revised closing has what has led to some of those moves as well. We'll have to wait and watch as to whether those moves can sustain till the day of trade of Tuesday. You've seen, again, Shriram Finance, Axis Bank, some very decent moves across the board. When you're looking at the losers, Apollo Hospitals and Sun Pharma, along with Maruti and ONGC. Both Maruti and ONGC are earnings candidates. Maruti's numbers came out Friday, and ONGC's numbers are expected Tuesday. So that was the tilt. So on the big losers on the back of earnings, Muthoot Finance down 7.5%, Latent View down 5.7%. Narayana and Ramaratna Wires were also down 4 to 5.5 odd percent. Urban Company was the big positive, 13% higher on that stock. Divi's, Jindal, AB Capital are just some of the other movers, all of which have moved 5% plus in the day of trade today. Some very decent moves shown by some of those counters. Of course, those last minute changes in terms of rates seem to have impacted some of the returns. We'll have to wait and watch as to how, again, some of these names play out in trade tomorrow. When you're looking at, again, results reactions that have come out during the market on Monday, Blue Jet Health, IEX are just some of those names which buzzed on the back of one on results. Blue Jet and IEX on the back of the Supreme Court ruling that came out. Ethos was the big mover as well, 13% higher. NoSil up 5%. InfoEdge on the back of the JobsPeak index data which came through was up 3.5% as well. But here to kind of summarize what cues we want to look out for Tuesday's day of trade, here's Darshita.
Right, here are the cues to watch for August 4, and back home the focus will be on the weekly Nifty expiry, which could keep the volatility elevated throughout the trading session. Globally, markets will be tracking trade-related developments along with the US job opening data, which is a key indicator for the health of the labor market and the Fed's rate outlook. Now, on the earnings front, globally, HSBC will be in focus. In India, the biggest earnings will be to watch for Bharti Airtel and ONGC, and apart from these, key companies include BSC, MCX, Pidilite Industries, Godrej Properties, Nykaa, Kalyan Jewellers and Deepak Nitrite will also announce their quarterly results. Among the corporate announcements, the RBI will auction 26,850 crore worth of state government securities across 17 states. And lastly, keep an eye on EMI Technology Solutions as its lock-in period ends, which could lead to the increased activity in the stock.
All right. Thank you, Darshita, for bringing us through all of the important cues to watch in the next trading session. But bringing on board now, we've got Mr. Lakshmikant Shukla joining us. He's the technical analyst at Yes Securities India. A very good afternoon, Mr. Lakshmikant. Thank you so much for joining us. It's a pleasure to have you on board. Let's start with the big picture. How do you read the market's activity today?
Hi, good afternoon to both of you. So Nifty played fairly well in today's sessions. It has surpassed its April month swing high. From last few sessions, we have seen that this level of 24,600 was acting as the strong hurdle. But in today's session, the Nifty has given the breakout of this level and now retesting its 200-day SMA levels that is placed around the zone of 24,775 to 24,800. So I think from here on we will see upside move if it able to surpass this level of 24,800. So that would be the immediate hurdle for the Nifty. Now this previous breakout levels of 24,600 to 24,500 could act as the strong support zone. Till Nifty hold these level, we will expect this positive momentum will continue. Major factor for this, I think, Bank Nifty, it has been consolidating below its 20 and 200-day SMA since last few sessions. But in today's sessions, it has also given a strong upside move, surpassing these levels. Now it is going to give falling trend line breakout of the levels of 58,600, from where it will continue this upside move toward the levels of 59,200 to 59,500 zone. Here is also support is placed around its previous swings low, that is placed around the levels of 57,400. So holding these levels, we will see positive momentum in both these indices. Even if we look at some other factors like FI long short ratio, so that has been showing positive momentum, because it came up above its previous mark of 10x. And if we look at the cash segment, so even for last few sessions, we have seen buying momentum. And apart from this, India VIX is still trading below all its key moving averages. So I think these all are the factors which can boost up the market sentiment, and we will see further upside move in Nifty as well in Bank Nifty.
What do you make of those last minute moves, Lakshmikant, with regard to the revised closing mechanism? How has that played out, and what's the explanation? You've seen these huge spikes right at the end of day.
Yeah, even strong move, because around 50 or 55 was trading around the zone of 24,600. And when I looked at the market around 315, then after I've seen that the strong upside move coming from these levels, it has almost retested this 200 SMA within a short period of time. So even so surprising.
Lakshmikant, we believe we have you on a bad line, so let me get our producers and directors to fix that, and thereafter probably get your clearer picture on how you're looking at the moves there. But just in terms of cues, and you've got a couple of stocks which will come out with earnings tomorrow, including the likes of an ONGC. That's going to be the at least on the Nifty 50 end. And even as the week rolls by, you'll have the likes of a Titan, a Trent. You'll also have SBI, Hindalco come out with numbers. So that's something that you want to keep on your radar all through the week. Of course, Trent perked up 1.5%. But we have Lakshmikant back. Lakshmikant, again, sorry, if you can give us a perspective right from the start as to what's played out in terms of that the move in the last few minutes and what explains it.
So even I was surprised after seeing that coming strength which we've seen in the last few minutes of the closing sessions. So even I don't have much idea about it, that why we have seen this kind of momentum. But I think the Nifty has given the breakout. I think that this positive momentum will continue, and if it able to hold this support, we will expect to see further upside move in both the indices.
24,774 level, we'll continue to see upsides tomorrow. Is that what you're really penciling in, or will we see a bit of a downtick because the level has shifted itself towards the last 10 minutes of that session?
So always 200 DMA act as the hurdle for the Nifty. So I am also looking some sort of consolidation or bit of profit booking from the current levels. But the way Nifty has given the breakout from its April month swing high, so that is totally changed the texture of the market. Now I think market will change from the sell on rise to buy on dips until it holds this level of 24,500, 24,600. We will remain positive, and we will continue to see this positive momentum in the upcoming sessions also.
That Lakshmikant. Tell us what's your view on the IT pack. That one's been quite volatile in the past few trading sessions. What are the key levels that you're looking at on that front?
See, Nifty a breakthrough from its swings high, and it has given an inverted head and shoulder breakout of the levels of 29,500. And we have seen then after we have seen sound move in Nifty. I think And after taking a breather from last 2 days, again it has resuming its upside move. I think from here on we could see positive momentum in Nifty IT, and it is also going to retest its 200-day SMA that is placed around the zone of 32,750. So overall view is looking positive in Nifty IT, and I'm expecting good positive momentum in TCS, Infosys, Wipro, and some midcap IT space like Coforge, Persistent, and LTM.
And what about auto, Lakshmikant? That's been the other very, very decent mover in the last week or so at least. What next, and your preference in terms of names within that auto pack?
So today we have seen range breakout in Ashok. Already and even if you look at the Tata Motor Commercial.
Lakshmikant, we have you again on a patchy line. Let's fix that. Let's take some time and fix that essentially, because I want to know the view there from Lakshmikant. What we'll do is slip into a very short break, come back, set you up for the day of trade on Tuesday, and also get Lakshmikant's view and stock-specific advice for Tuesday's day of trade. Stay with us.
Welcome back. You're tuned into Market Edge, and we're going to be resuming our conversation right now with Lakshmikant, whose line I'm hoping is now all prim and proper and ready to go. Lakshmikant, all good on your side?
Yeah, I think I'm audible now.
Yes, you're more than audible. So we were having you discuss where you're seeing the markets placed going into trade tomorrow. What's your view on that?
So as it already retested 200-day SMA, so slight profit booking is possible because Nifty is quite stretched from its previous level. So I think this 200-day SMA could act as the profit booking. But I think as long as it holds this previous breakout levels of 24,500, 24,600 zone, we will remain positive. From after consolidating in near this 200-day SMA, we will see further breakout move, and we will see Nifty is advancing higher toward the levels of 25,000 soon.
Lakshmikant, top picks very quickly. So give us that. And is it a buy at 24,500 kind of a market? Is that what you're indicating?
Yes, I'm also saying I'm also thinking in that sense that if we take a dip toward the levels of 24,500, 600, so from where we can initiate long call in index with the stop loss of 23,000, 24,300 on the downside. Now, as you talk about my picks, so I have two recommendations. First one is Shriram Finance. Today we have seen ascending triangle breakout in this stock above the levels of 1075, and also it has closed above the same with the formation of bullish candle, and from last few sessions it has also hovering over all its key moving averages, so that is showing strength in Shriram Finance. So one can go long in Shriram Finance with the stop loss of 1040 and can expect the target of 1045 on the upside. Second stock is Supreme Industry. So since it has seen a uptick from its lower level of 3,227, now it has given falling trend line breakout on the daily chart, and also formed a strong base around 50-day SMA that is placed around the zone of 3,400. So I think as long as it holds this level, we will remain positive, and probably it could see our target of 3,700 in the upcoming sessions.
All right, got that. So Shriram Finance, Supreme Industries flagged as some of the stocks to watch out for in tomorrow's trade leading up. Lakshmikant, thank you so much for your time. It was a pleasure having you on. Thank you. With that, we'll just switch into focus now in the earnings candidates that we've seen so far. We've seen 34 out of the 15 Nifty companies having reported their first quarter earnings, and these have been broadly better than what the street was estimating. Brokerages have also said that earnings downgrades are moderating, with financial materials as well as utilities leading the upside. We've got Ashesha now joining us with us to take us through what the trend has been in the first quarter earnings so far. Ashesha?
Well, yes, we are more than halfway through the earnings season, and let's take a look at how earnings so far have been. And first up, let's start with the Nifty 50 pack and the number of companies that have reported earnings above street expectations. Now, about 34 out of 50 Nifty companies have already reported their earnings. 14 companies have managed to beat street expectations. 8 have been below street expectations. 12 in line, and 4 companies have reported a mixed bag. So that's how the Nifty 50 scorecard so far has been. Let's also talk about what brokerage houses are saying. Now, Citi is saying that the companies under their coverage have reported earnings better than expectations, and this is 4% ahead of their estimates. Morgan Stanley, meanwhile, says that revenue growth of about 19% is what the industry has reported, 6 percentage points ahead of their own estimates. Motilal Oswal, meanwhile, has also gone ahead and said that the numbers have largely been better than what the street was working with. So across the board, the consensus saying is that the numbers this time around so far have been better than what the street was working with. Let's also talk about the 3 factors that weighed heavy on the numbers in the quarter gone by. First, of course, was the input cost inflation led by West Asia crisis. Second is net interest margin pressure, especially for banking companies, and mounting losses for oil marketing companies because of the surge in crude oil prices that we have seen in the global market. These are the 3 factors that largely were weighing heavy on earnings season in the first quarter of FY27. Now, Citi says that consumer durables, especially discretionary auto and durables, have delivered better than expected growth. Morgan Stanley says that average EBITDA growth stood at about 20%. The strongest profit growth came in for utilities, materials and financials. Industrials and utilities were leading the beat this time around, and consumer staples were some of the laggards that we saw in the quarter gone by. So this is what Morgan Stanley has to say with respect to specific sectors and the kind of performance that we saw in the quarter gone by. Meanwhile, Motilal Oswal also has come out with a report where they say that the upgrade to downgrade ratio stands at 1.6 times. In fact, they say that 70 companies have been upgraded versus 45 companies which have seen downgrades this time around, and hence the ratio stands at about 1.6 times. RIL, Bajaj Finserv, Shriram Finance, Nestle and ICICI Bank, these are the companies which saw FY27 upgrades as far as earnings estimates are concerned. And on the flip side, Interglobe Aviation, Dr. Reddy's, Tata Steel, Wipro and Maruti Suzuki, these are a couple of other stocks which have seen downgrades as far as FY27 earnings are concerned. Motilal Oswal now has financials, auto, new age, manufacturing, industrials and discretionary as their key overweights, and private sector banks, staples, energy, telecom, commodities, utilities and renewables as the key underweights in their portfolio. So this is what the brokerage houses have to say with respect to the earnings gone by. Now, several factors which will continue to remain at play going forward as well. First and the most important has to be geopolitical crisis with respect to the US-Iran war and the developments that take place there. Monsoon progress, which has been below normal so far. Cool off in input prices, which is expected to happen and will perhaps aid margins in the coming quarters. Domestic demand environment, especially rural demand if monsoon is below normal. And the AI trade, and India largely being known as an anti-AI trade, will be another factor to watch out for. So these are the 5 factors which will determine the trend for Indian equity markets going forward. But largely, the consensus has been that earnings so far have been better than what the street was working with.
All right. Thank you for that, Ashesha. In fact, we also spoke with Gautam Duggar. He's Managing Director and Head of Institutional Equities at MOFSL. He expects the Nifty earnings to grow at 13 to 14% in FY27. Believes the index is reasonably valued, sees better opportunities outside the Nifty 50 names, prefers PSUs, diversified financials over private sector banks. Listening.
The first quarter, we have not seen any earnings cut. In fact, we have seen a marginal upgrade. So for my entire coverage universe, we have seen about 1.8% earnings upgrade for FY27. That sounds like music to the ears. Second, the number of companies beating estimates and meeting expectations cumulatively are 78% of the coverage universe. So only about 22% of the earnings companies have disappointed or have missed the expectations. Number of companies where earnings have been upgraded divided by number of companies where earnings have been cut is 1.7 times. You know, this ratio was below 1 for a very long period of time. So early signs of an earnings revival, and more importantly and hearteningly, your top line growth is in a handle of 17-18%, which is highest since December 2022. So a bit of an inflation making a comeback is also helping because last 2 years, your nominal GDP was 8.5, 8.9%. This year, we are expecting about 13% nominal GDP growth. So 14, 15% earnings growth for benchmark indices looks doable for next 2 years, but the real fun is outside Nifty. Last year, my midcap earnings grew 24%. If you exclude OMC, last year earnings growth for midcap was 20%. This year on that 20% base, again, we are expecting 19% growth. So fairly solid set of numbers. For Nifty, we are expecting a 13-14% earnings growth this year, EPS of, I think, 12.25. Now, within a 20% broad index earnings growth or my coverage universe earnings growth, you will always find 10, 15, 20 mid-cap ideas where growth is upwards of 30%. Similarly, small cap, whatever allocation increase you have seen in small cap portfolios in the last 2 months, it's happening because the earnings trajectory is changing now. On a base of 10%, 30% is doable because you have many sectors within small cap always look at bottoms up because sectoral, doesn't give you too much of insights. So you have a very low base of financials in small cap. Some of the other sectors are also having a low base. So I think the action is going to be outside of Nifty. Having said that, Nifty is looking reasonably priced, right? But, if we look at this data as a percentage of total market cap in India today, let's say if 100 is the market cap, the contribution of large cap is at a 2-decade low. The large caps are accounting for only 59 to 59.5% of total market cap of India, right? Now, if I have to play devil's advocate, I can always say that mid caps and small caps are already looking very expensive because the mid cap index is 28 times or 27 times. And small cap is close to 23, 24 times, whereas large cap, which is Nifty, about 18.5 to 19.5. So valuations is in favor of large caps, but growth is in favor of mid and small cap. And India is a growth market.
That was the take coming in from Gautam Duggar of Motilal Oswal. But with that, it's a wrap on this edition of Market Edge. Thank you so much for watching and do stay tuned to ET Now for more market updates coming your way.